Property market momentum is strengthening and broadening around Australia, and that's despite 11 interest rate rises and rising inflation and all the negative media. All those economists and commentators who predicted property Armageddon, well, boy, they were wrong, weren't they? So watch this week's Property Insider videos. Dr. Andrew Wilson and I explain exactly what's happening to Australia's economy, our housing market, the rental markets, and interestingly, immigration, one of the factors that's driving our housing markets around Australia. If you want to keep up to date with what's happening in real estate, please subscribe to this YouTube channel. We've had over 2 million views. And why not click the little bell icon so we can update you each time a new show comes out. If 12 months ago in May 2022, I would have told you that interest rates would rise 11 times in the next year, no one would have believed me. If I would have told you inflation would remain stubbornly high, unemployment would have a 3 in front of it still, and rents would be rising by more than 20% in many locations, that would have been hard to believe. Yes, here we are. And in these weekly Property Insider chats, when Dr. Andrew Wilson said we shouldn't be concerned about the forecast of property Armageddon and that the property markets wouldn't crash, many didn't believe him. Yet we experienced the sharpest but the shortest downturn in modern economic history. In fact, when Dr. Wilson called the turn of the property cycle earlier this year, many didn't believe him. Yet property market momentum is building and it's actually broadening across the country. So to better understand where we are today with regards to our property markets, inflation, rents, migration and interest rates, I'm looking forward to my weekly chat with Dr. Andrew Wilson, Australia's leading independent housing economist and chief economist of My Housing Market. Hi, Andrew.
Yes, hello, Michael. And, it's always, when we're talking about the economy, we are always surprised, I suppose, at some level. But I'm not so sure we should be surprised about the robust and resilient nature of Australia's housing markets, because we only really have to look at history over the longer term to validate the fact that we, shouldn't be surprised that our markets bounce back quite early, typically. And even, as you mentioned, 11 interest rate increases over the past year have failed to slow, not just failed to really slow the market down, but have certainly not produced an impediment to what is now looking at a remarkably strong rebound.
Well, let's start off with that. Normally at the end of each month, you provide us with the data of what's happening around Australia, but let's have a sneak peek mid-month.
Yes, we've got an update, mid-month update for house prices, Michael. This is the May quarter house prices. Of course, My Housing Market produces a rolling quarterly index of house prices. We're typically the first to the market with that monthly update. It proves to be, not just with the quarterly data set, which of course provides more insights compared to monthly results, but it does track what we see being produced in most other data models. So we also produce a mid-month update, Michael. So we have the May mid-month update. Of course, there are more observations, more sales to come through, but we do find that, and this again reflects the solid nature of the data set, that it's pretty much on the money in terms of where we will end up when the month is finished. So let's have a look at the mid-month results, Michael, for the May quarter, comparing it to the previous April quarter. We'll just look at the major capitals, and again, we've seen the national median house price, of course, which is a weighted average, so it does reflect basically what's happening in Melbourne and Sydney, and to a lesser degree, Brisbane. But again, we're reporting another increase, another monthly increase with the quarterly data set, Michael, over May so far. That will be the fourth consecutive increase in median house prices, national median house prices this year, consecutive increases. And of course, it does again validate that the national market bottomed out over the January quarter this year. So rate of growth to this point is not as strong as it was over April. We do have more observations to come in, so that may change. But certainly at this point, we have another increase in the national median house price, Michael. And when we look at the capital cities, all our capitals, major capitals, have reported an increase over the month so far in the quarterly house price model, with the exception of Brisbane, where prices are flat so far over the month. When we look at the rate of growth this year so far, Sydney head and shoulders above the rest. The Sydney median house price is up by 4.3% compared to where it was over the December quarter last year. And Perth also quite a solid performer, up by 2.9%. I think value opportunities are increasingly motivating buyers into the marketplace, Michael, because we can see that even though we've had certainly a robust start to the year in terms of house prices, they're still in Sydney, Melbourne and Brisbane and Adelaide are lower than where they were a year ago. And I think that value perception is driving buyers into the market who realise there are still opportunities to purchase at prices that were lower than a year ago. So house prices rising again over the quarter. We can see also that unit prices have increased. In fact, unit prices have increased at a faster rate, national unit prices, than house prices. And we've seen that trend certainly rising higher, stronger results from the unit market compared to the house prices. So again, we've seen the fourth consecutive increase in unit prices, national unit prices over the May quarter. And when we look at the breakdowns for the major capitals, all major capitals reported higher increases in unit prices over the May quarter to mid-month, except Brisbane, which again was the outlier, where unit prices were down by 0.9% over the quarter compared to the previous April quarter. But all unit prices are higher this year in all the major capitals this year so far compared to the beginning of the year, December last year. So Adelaide, which is a small market for units, up by 6.2%, and Perth 3.1%, again a smaller market with more volatile results for units. But nonetheless, the larger unit markets, Sydney, Melbourne and Brisbane, have all increased by over 2% so far this year in terms of prices. And the Brisbane market remains the top performer in terms of annual growth of the major markets, up by 5% over the past year. And that brings it up to a 23.2% increase over the past 2 years, Michael. So again, units are proving to be a particular strong element of our housing markets. And I think a lot of that reflects the affordability advantages that units have over houses.
Well, over the last week, there's been lots of news about the economy and our employment figures, and some's come as a bit of a surprise, but maybe the Reserve Bank is going to be paying attention to what's happening to our employment figures, Andrew.
Well, I think, look, at the margin, the numbers again are very strong, Michael. We had the unemployment rate released or the labour market data released for April last week. Again, reflects a very, very strong labour market and a booming economy. You know, ifs or buts or maybes about the results, but maybe just an early sign of an easing in activity. If we do remember back to January and February, we also had some perhaps early signs that the labour market is starting to reflect the results of higher interest rates. But of course, our labour markets bounced back quite strongly, particularly over March. But again, an unemployment rate just up slightly compared to March, 3.7% unemployment rate, which of course we know in terms of the historical perspective, Michael, is at a record low or near record low. You know, we have to go back to the early 70s, which was a quarterly measure of unemployment. This is a monthly measure. It is the lowest we've had, or near lowest we've had, a monthly measure. You know, quite remarkably low unemployment rate, up a tick over April compared to March. Maybe, you know, we can start to say that this is the first sign of some easing in economic activity. But as we've seen in previous months, that can bounce back. So we'd need to have some sort of a series of declines in unemployment to perhaps have the Reserve Bank feeling that higher interest rates are doing their job, which is what they want, to stop demand and put downward pressure on inflation. So if we look at the 3.7% unemployment rate over April, still a near record low and a very heady result, but of course slightly higher than the March result. Following very strong jobs growth over the March quarter, jobs were down by 4,000 over the month of April. Unemployment numbers also increased after falls over the previous month. Unemployment numbers were higher by 18,000. Participation rate, it also just dropped marginally, but still near that record high of over 66%. But all our states are still reporting very low unemployment rates. Really, rate increases, if we look at the longer term picture, have had no real impact on the real economy as the RBA had planned. So I think we've got some more work to do, but certainly we could perhaps consider that this is the first sign that higher interest rates are starting to reduce demand and push up unemployment, and therefore create some better conditions in terms of controlling inflation.
Having said that, one of the things driving inflation are the booming rents. Let's call them skyrocketing rents over the last year.
Yes, Michael, it's extraordinary, the growth that we've seen really just this year. If anything, the rental market in terms of higher rents is gathering momentum, which we saw recently with the April rent report, that we've seen just extraordinary growth in rents even over April. And what we're seeing particularly, and continuing the unit theme, is a drive towards rentals for units, tenants moving towards units as perhaps a more affordable option. But I'm not sure they're as affordable now as they once were, because as we saw in the rent report, that we've seen a 40% increase in Sydney asking rents over the past year. Now, of course, we recognise that that's came from a very low base last year for various reasons. But our daily tracking of rents, Michael, is showing us that there's just really no easing. In fact, and these things, need the 4 months to work their way out to the final result. But we're now seeing unit rents at a higher level in Sydney than house rents. You really have to sort of check the data to see that these things are accurate, but they certainly are. And we've saw with the minutes that were released last week from the Reserve Bank that they've now conceded, and they tended to be a little bit circumspect about the prospect of higher rents in some of their previous commentary. But they've now conceded that, and they were putting these higher rents down to changes in household size, which I'm not sure in terms of the longer term position, and particularly the growth that we have had over the past year, that you could put it down to some marginal shifts in the size of households, meaning that there was, smaller households and therefore more demand for rental properties. But the Reserve Bank, as I mentioned, has now conceded that we're in for a long haul in terms of higher rents. And of course, that's logical, because what we report as rents in terms of rent reports reflects new rentals, that is asking rents for new leases, rather than, which is only a small proportion of the total rental market. But of course, the expectation is clear. As existing leases are renewed with existing tenants, that landlords will be using the asking rents of new leases and new tenancies for their renewing existing leases. And that only means, of course, that we have the potential or the likelihood or the certainty that rents will continue to rise over a lengthy period going forward for the total rental market. And of course, that's what's measured in the inflation numbers, is the total rental market rather than the asking rents for new leases. And the Reserve Bank in their May meeting minutes has conceded that, and they've put it down to initially, of course, recent increases in net overseas migration, which shouldn't come as a surprise to the Reserve Bank. They've been using that as an excuse also for higher house prices, but we've known that we were going to see a surge in overseas migration following lockdown. We even know the numbers. So it's a little disingenuous for them to be using that as an excuse again now for rental increases, when we knew that was a likely outcome, well, in fact, a certain outcome. And of course, they're all also mentioning now the shortfall of supply as a factor relative to that new demand coming through, putting upward pressure on rents. And they are now expecting that to continue for some time. So they've sort of finally woken up, perhaps we could say, to surging demand, particularly from migration, overseas migration, and the fact that we have a shortfall in supply in terms of rental properties. And a lot of that, in my opinion, was the attempts by policymakers to restrict investor lending, which the RBA was part of that process. And now, of course, we have this long-term potential for higher rents, which will only work its way into higher inflation, Michael.
Well, your chart here shows that the majority of the overseas, both permanent and student visas, are going to New South Wales and Victoria.
Yes, look, we've got a new data set today to have a look at. The population data that we use to reveal what's happening in terms of increased population, particularly from overseas migration, is a little backward looking from the ABS. The data we're relying on to this point of time, which will be updated shortly, is for the September quarter last year, Michael, which of course is is quite some way back. It is a long time ago. It certainly gives us the trend, and we know that following lockdown that there was a bounce back in migration. We can also use the overseas arrivals data that comes out every month, Michael. So that's obviously a much more timely insight into those that are coming in. It's a different measure, because it does measure visas, and it's not really about the actual number per se, as the official population growth number is. It's about the change in the level of visas that are being processed and approved. And if we look at the chart that shows the change, of course, we had in overseas arrivals following the lockdown. Certainly, arrivals fell away to very low levels, but we've now seen that bounce back. This is the latest data for the year ending March 2023. And when we index the arrivals data and combine both permanent and student visas, we can see a big shift, obviously, over the year to March, but we're still around about 30% lower than where we were at the peak in 2019.
But the budget figures suggested that the population growth is going to be very strong over the next 3 years and even up to the next 5 years, where there could be 1.5 million, even up to 2 million extra Australians in 5 years' time. That means we're going to have to build another 5 Canberras or probably another Perth in that time. And we haven't got the building capacity or the infrastructure to cope with that, Andrew.
Well, we don't, Michael. And really, the only answer, and I'm not suggesting this is a solution to our undersupply, is, because all that population growth is coming from overseas, as the data can show just with those overseas arrivals, how they've surged over the past year, both for students and for permanent visas. The only way to really address on the demand side is to stop migration, and that's not going to happen. I mean, even if we had another lockdown in terms of closing our international borders, we'd still be struggling to house our existing population. And just those numbers to reflect what's expected over the next few years has got to be a horror story for a rental market from the tenant's perspective, but also from house prices as well, for those that will start to really struggle to get into the marketplace as a homeowner at all. The numbers are very challenging for housing market balance. And as we know, we've moved well past the position where governments can affect this certainly on the supply side, as they will not be prepared to obviously tackle it on the demand side by a significant reduction in migration. But that's really the only way to bring balance back into our rental markets. And the cloud cuckoo land policies that are coming up as thought bubbles in terms of rent freezes, etc., are just not only nonsense but unsustainable. Also, because all they will do is restrict even more private sector, rental market activity, particularly from the investor point of view. And it really smacks of trying to nationalise the private rental market, Michael, which has certainly a lot of implications going forward in terms of how we see ourselves as a free enterprise economy.
I just wanted to interrupt this week's Property Insider Chat to remind you that this is not specific property advice, because we don't know your personal circumstances. But if, like many property investors, you're wondering what's the right thing to do at present, should you buy, should you sell, should you wait, you can trust the team at Metropole to provide you with direction, guidance and wealth-producing results. Whether you're a beginner or an experienced investor, at times like we're currently experiencing, you need an advisor who takes a holistic approach to your wealth creation, and that's exactly what you get from the multi-award-winning team at Metropole. We help our clients safely grow, protect and pass on their wealth to future generations through a range of services: strategic property advice, buyer's agency, wealth advisory, property management, renovations and development management services. Go to metropole.com.au and explore your options with a complimentary Clarity consultation. Well, we always have a chat about the auction markets as well, because it gives us a good indication of what's happening on the ground, how buyers are feeling, despite all the negative messages in the media. Are sellers feeling the right time to sell? And clearly the momentum has continued in our property markets, and sellers are finding buyers at all levels.
Yes, Michael. And of course, we've discussed the weekly results from the weekend auction markets. This is part of what we do in our broadcast. But we did speak during October, November last year, and even September, that we were showing signs of an improvement in auction clearance rates. And that was the first sign that markets were starting to sort of recalibrate. More buyers were finding their way into the marketplace after the scary winter of higher rates last year. And that's just continued on, Michael. The trend has just continued to rise, and our results have just been remarkable over the past month, particularly, but clearly rising this year. And there's no surprise why we've seen higher house prices following higher auction clearance rates. And the weekend results are now quite remarkable. We're now pushing in both Sydney and Melbourne towards an 80% clearance rate. And we usually use that 80%, Michael, as a benchmark for the B word, which is boom. And who would believe, and it would be a lot of those commentators, the vast majority who predicted doom and gloom for this year, are now having to confront the reality that we may be getting auction clearance rates that reflect a booming housing market, all within the environment of higher interest rates. I think they need to go back to school or find another vocation, because again, we had a clearance rate in Sydney, Michael, just under 80%, 79.4%. And we had higher numbers of auctions. So it wasn't off a small base in terms of auction numbers. We had quite a reasonable increase in auction numbers in Sydney, a big increase in auction numbers in Melbourne, and yet they too were just under 80%, 77.9%. Brisbane a little lower at 64.4%. We know those Brisbane auction clearance rates tend to be a little lower than the other major capitals, although they have been quite strong this year. Adelaide a little lower also, but still a good result there for most sellers. And Canberra has shown some clear signs of picking up over the last month, Michael, and its clearance rates are now where they were stuck under 60%, have now been tracking over 60% and over 70% in recent weekends. But I think what the real instruction there is when we look at the rates where they are today, Michael, particularly Melbourne and Sydney, and compare them to where they were a year ago, and you can see that they are significantly higher now than over May last year to this point and to the date. And of course, that was when the markets, the Sydney and Melbourne markets, that had already started to ease because of the normal cyclical adjustments when we're being confronted by the first interest rate increases in over a decade. And that helped to exacerbate those cyclical adjustments. But way ahead now in terms of clearance rates in Melbourne and Sydney compared to a year ago. And this is a very heady and a very strong market. And I think I must point out also, Michael, we've still got a good 6 weeks to run in the autumn selling season. And unlike previous years, really, we have to go back to 2018. We don't have any May interruptions to, to sentiment. Last year, of course, at this time, we had the federal election, and the 2 years prior to that, we were involved in COVID. And the year before that, we also had a federal election in May. So this is the first, clear air for the back end of the autumn selling season. And I think there's still some pent-up demand, particularly in Melbourne, to be released from COVID, and also some pent-up demand from last year's negative sentiment through higher interest rates. So I think the prospects are that, we're likely to get those 80% clearance rates, particularly in Sydney, in coming weekends, Michael, which is, again, quite a remarkable turnaround. And the charts also show us how much higher our markets are tracking currently, the full monthly results compared to the same period last year in Melbourne and Sydney. Also higher in Brisbane compared to a year ago. And similarly, Adelaide and Canberra just a little bit below where it was a year ago. So we know that those auction market results, weekend auction market results, a solid indicator of what's happening broadly in housing markets. And we can expect to see higher prices going forward, particularly over the back end of the autumn selling season, Michael, as we await another rebound over spring as well.
Well, as I started off to say, when we were in this position 12 months ago with the federal election result had just come out, no one would have believed we'd be here now. And whoops, a lot of those predictions others made were wrong, as they tend to be. So it'll be fascinating to keep chatting with you each week to see what's happening and give a real commentary on what's going on in our housing markets around Australia. Thanks for your time, Andrew.
Yeah, thanks, Michael.